Welcome back, everyone. Let's present our next company, Altus Gold. Altus has executed an LOI with Scorpio Gold, who trades on the TSXV under the symbol SGN and on the OTC Pink sheets under the symbol SRCRF, and where Scorpio will acquire Altus Gold via reverse merger. The combined entities will be renamed Altus Gold Corp, with the Altus Gold team assuming management and control of Scorpio Gold at closing. Altus Gold currently holds two primary assets in the Walker Lane Trend of southwestern Nevada, recently named the #1 mining jurisdiction in the world by the Fraser Institute, the Mineral Ridge Mine, and the adjacent North Star Exploration Project, as well as the Gold Wedge Manhattan Project. Please welcome Director Zain Kalan. Nice to see you, Zain.
Nice to see you. Thank you for the introduction, and yeah, happy to be here.
Great. The floor is yours. Call me back when you're ready for questions.
Great. Thank you. So thank you all for joining. My name is Zain Kalan. I'm a director of Altus Gold Corp. Altus Gold really comes from the genesis of an exploration project that we were working on in Nevada that's adjacent to the Mineral Ridge Mine. The Mineral Ridge Mine has been around for a long time. It's been mined continuously since the 1800s. And it most recently has been a portfolio of Scorpio Gold. As Anna mentioned, it's a TSX venture listed company under the ticker SGN. And Scorpio Gold has had the asset since around 2009, 2010. And it has produced about 1 million ounces historically, 500,000 ounces in recent modern history. And we were able to acquire, with Altus Gold, the exploration property adjacent to the Mineral Ridge Mine. And the exploration project has never been, which we call the North Star, has never been mined or never been even drilled. It's only had very high-grade surface sampling done historically over the project. And we were interested in potentially looking at acquiring the Mineral Ridge Mine, knowing that it was currently in care and maintenance with Scorpio. And potentially putting the assets together in the future. Through that process, we became aware that Scorpio had another asset, the Manhattan Wedge, or what's been historically called the Gold Wedge project. And we saw the opportunity to kind of put all three assets together, all three projects together, and build a very large company, a larger company for that matter, that is positioned to be a very near-term producer in Nevada, as Anna also highlighted, one of the top, or the top jurisdiction for mining in the world, as rated by the most recent Fraser Institute survey, which is generally recognized as one of the preeminent survey for mining jurisdictions. So we have signed and executed an LOI with Scorpio for Scorpio to acquire Altus Gold, whereby we will become the control block in Scorpio and be in a position to really move forward on the consolidation of the Mineral Ridge, which with the current mine is about 4 miles. Adding our 8 miles will consolidate the full 12-mile long ridge, what we term the football, bringing together the Blue Sky exploration project with the existing past producing mine that's fully permitted and ready to go back into production, and also has a feasibility study done to build a 4,000 ton per day mill that would significantly increase the economics and stabilize the economics of the asset, and would even do so further when you add in the potential high-grade system that exists on the North Star exploration land. Beyond all of that, we do have the Manhattan Wedge project, which currently has an operational 400 ton per day mill that we are looking at a number of different ways to leverage in terms of doing JVs, buying ore and running it through the mill to create short-term cash flow, as well as doing just general tolling. Beyond that, the Manhattan Wedge project has some very high-grade drill results from the past 3 years. With very good drilling, three really great drilling campaigns that have been run. It's an ex-Kinross project that has significant value in itself, but beyond that, it really does present a really great exploration project in the short term, while having production capacity with the existing mill that's there, alongside a lot of blue sky in a number of different aspects. So I'll just jump in, and I think I've gone over the key highlights here, but I'll keep moving down the map, down the slide deck. Here we do have the two projects highlighted, or the three projects. North Star, Mineral Ridge, I talk about as one, and the Manhattan Wedge project, which is about 100 kilometers or 60 miles as the crow flies north. So both projects are located in the Walker Lane Trend in Nevada, in southwest Nevada. Pretty much directly between the two projects is Tonopah, which is a historic mining town located very near Goldfield, which is at one time was the largest town in Nevada during the gold rush. And both projects have the value of being very close to Tonopah. They're very close to infrastructure, for that matter. And they're in the midst of a lot of other major mines in the region. And the Walker Lane Trend has produced significant value in a number of different aspects through all of these mines. Round Mountain, being Kinross's second largest project, is located about 10 miles north of the Manhattan Wedge project. And the Manhattan Wedge actually was a former, as I did highlight, was a former Kinross project as well. So as noted, the Wedge is the 2,400 hectare project. It does have a fully operational 400 ton per day mill. It's a gravity mill that we are in the process of looking at adding a flotation circuit to really kind of get it into production in the short term. Gold Wedge has historically produced about 200 or over 200,000 ounces of gold between 1970 and 1990. And there's the main value on this project is really driven by the very high grade drilling results that they've had over the past 2 years in 3 drilling campaigns. Beyond that, the project has seen significant drilling in a hole. There's been over 1,000 drill holes with over 10,000 meters of drilling. Just very lots of exploration has been done there. Really, really great results in the most recent campaigns. And we just see a lot of significant upside in doing so. Beyond that, our belief is that the project really has kind of been undervalued in that when Kinross had it, they were looking for a large open pit mine, whereas our belief really is that the project is probably better suited to a high-grade underground mine, which doesn't really fit Kinross's profile, but does fit our profile as a small to medium-tier producer, which is where we see the value in the asset. Our intention is to continue a new drill campaign in the fall, which we believe, and we're currently undertaking an updated resource calculation, expanding on the data that Kinross had from 2008, the block model that Kinross produced in 2008, and we believe will present a significant increase in the reserve that we believe is there on the Gold Wedge. I'll just click here quickly through the drill results, and these slides are available on our website. So I encourage anyone who would like to kind of view them and dig through the deck to reach out directly to myself, and I could schedule a follow-up call or go to the website and take a look. Here's some pictures of the project. You can see there's been significant underground drilling. You can see a picture of the portal. All of this infrastructure, there's a lot of established infrastructure at the project. You can see some pictures of the mill as well. So moving on, I'll jump into North Star, Mineral Ridge, the combined projects that we see a lot of potential upside there. Mineral Ridge has been around for a long time, and it had in Scorpio, and before that Golden Phoenix, and before that another company. And I think there's been a lot of people have had concerns about the project. Primarily, it's because it's always been too small. It's only been 500,000 ounces, but the real value that we see with Mineral Ridge is the infrastructure and the permitted infrastructure. When we talk about North Star, putting North Star and Mineral Ridge together, we're talking about a feasibility study that places the Mineral Ridge mine alone at $100 million NPV alone. And there's a lot of other assets and a lot of other companies in Nevada that have feasibility studies that position their companies at 100 million NPV. The value that Mineral Ridge has over those companies is that Mineral Ridge is permitted. Mineral Ridge is not only permitted for the current operations with the leach pad, but it's also permitted for the additional operations of adding the mill and all of the build out, all of the environmental, all of the aspects that are required to really create an economic project by building a $50 million mill and increasing efficiencies to 90% is all there, and it's all ready to go, and we could break ground very, very quickly. So we're very excited to really get things moving in the immediate short term and get Mineral Ridge really turned on. And beyond that, with the North Star, we see a lot of potential upside. With the high grade results, you can see on the map there, we've had 1 ounce per ton or 30 gram per ton gold samples along the ridge. It's never been drilled. It really is the blue sky that could take this thing from a 500,000 ounce deposit to what we potentially hope is a north of 1 million ounce, maybe a couple multi-million ounce deposit with a fully permitted, fully operational mine. I'll just click through some of the maps here. This just shows the full ridge with the active mines, as well as the exploration project. This shows a map of the existing pits, as well as having here, we have some of the metrics from the 2018 feasibility study. The most interesting thing about the feasibility study in 2018 is that it was done assuming a gold price of $1,200 per ounce gold. Obviously, these numbers are vastly increased to the benefit of the project and the benefit of the economics of the project when you consider the 3-year trailing average of the gold price, which would be north of $1,500, $1,600 today. These show the reserves on the leach pad, as well as the reserves in the existing pits. Here's some pictures. There's significant, as I did mention, there's significant infrastructure at the Mineral Ridge mine, from the ADR plant with the CIL tanks through to an existing assay lab that will present significant value to us while we're undergoing our drill campaign on the North Star, as well as inside the gates of the mine. And it really is, there's even a refinery where the gold has been poured historically. Doré gold has been historically poured at the Mineral Ridge property. And it really is an asset that it's sad to see when we visited recently that it's just sitting there idle. But we're very excited to get involved in this project and get it in a position where it will be operational and get it moving. This just shows this is focusing on the North Star project. Here you can see the North Star target. And this just shows this is the map that the geologists always love to show. It shows this at the top of the ridge, there's this collapsed caldera feature. And you can kind of see all these white lines, which represent the block faulting. And really what this is just shows kind of how all the fluids and the actual mineralization broke through the granite and created the potential feeder zone of the gold here. This shows some VTEM as well as our proposed drill holes on the VTEM. The light pink that you can see there is the pyrite. That's the source of, the host mineral of the high grade samples that we have produced. So you can see that there's these there's these almost chimney-like structures where you can kind of see that the alterations occur. This shows some pictures of the North Star as well. I'll touch briefly on the team. We have a really strong team behind the company, both on the finance side and the operational side. Michael Townsend is the CEO. Michael has had extensive history, raised multis of hundreds of $millions for a number of companies, especially in the mineral exploration space. Had a number of successful exits in the mining space as well. Chris Zerga, who's the current CEO of Scorpio and will become the COO upon conclusion of the transaction. Chris has run the Scorpio projects for the past 8 years and has significant experience in running mines. He's a great engineer. We have a lot of faith in his ability to really build on this. Stephen Craig, who's he's a geologist and was the founder of a number of different mines, including the Rawhide mine. Steve brings a lot of expertise and knowledge about Mineral Ridge, having been the former mine geologist at Mineral Ridge. And we are very happy to have Steve as a part of the team, especially in terms of determining our exploration plan for Mineral Ridge and for the wedge. Paul Dockweiler as well, also a professional geologist who brings significant experience, not only from Mineral Ridge, having been a junior mine geologist at Mineral Ridge, but also from a number of other projects, including the well-known MP Materials mine in Mountain Pass in California, one of the only producing rare earth mines in the world, and a real key strategic asset for North American rare earth production. I'll just kind of touch upon our timeline. We are on some of these dates have kind of shifted a little bit, but we are on track to get the transaction closed by the end of September. Really moving forward in September and October on a very aggressive exploration plan, and then moving forward to getting the mines back into production, and financing that. So with that, I'll conclude my presentation. We can bring Anna back, and as I did mention, I'm happy to answer any questions that may come up now. And if there is anyone who wants to reach out and learn more about the project, please feel free to reach out. You can reach out to me at zane@altus.gold or zane@altusgold.com, as well as at that phone number as well.
Wonderful. Thank you, Zan. Yes, we have a question from Hannah. She wants you to talk about the infrastructure around the North Star and other properties, roads, water, power, etc. And how much money do you have to put in?
Yeah, so all of the infrastructure is already there. Like, to put in context, this mine's probably had about $30 to $40 million invested in it historically. There's all the roads, all the water infrastructure, all the power. Everything is already there, ready to be turned on. It's fully permitted. All the environmental's done. It has the reclamation bond. This isn't really a build out scenario. The only to talk about capex, the capex that really exists is with the building of the mill. Now, that particular project will require capital investment, and as I said, it's probably about $50 million capex investment. Now, all of the permitting for that is done, and a lot of the pieces, including the power, the water, et cetera, all of those things are already in place. So the roads, all of that stuff already exists. So this isn't like starting from scratch. There is a mine there that has produced gold. This isn't starting from the beginning, and nor is it fixing a lot of things that or putting a lot of things back into production. This is really just an exercise in making the mine more efficient, and getting into a place where, regardless of fluctuation in gold price, we're going to be able to produce gold at a profit.
And Tom Graham wants you to talk about your financial structure, starting with the balance sheet, assets, liabilities.
Yeah, so there's minimal debt on the balance sheet. Company has, and as a part of this process where we're doing this financing, we will be extinguishing all of the debt. Company's got about $14 million on the balance sheet currently in assets. Sorry, $14 million in assets. And that's across hard assets that have obviously been depreciated. So our belief is that if we had to estimate that the replacement value of all of the hard assets that exist across the two projects is north of $30 million US. And it would probably take about 10 years worth of time to actually get the permitting to do so again. So there's significant value there that we think is undersold if you just look at the balance sheet, but the balance sheet's relatively clean, very minimal debt, very minimal. It's in a very clean state. So is what I'd say. And on balance sheet, there's $14 million in assets.
And can you clarify if one of your properties was producing, and if so, does that cover the monthly burn? And if not, how are you funding it?
Both projects have produced in the past. The Mineral Ridge mine has produced as recently as 2018, and we're currently funding it with money that we're currently putting we're raising and investing in the project to cover the carrying costs. But the mine is also, the company's also sold assets historically that have been able to kind of cover the carrying costs when it was not in production. But we're fully expecting to be in a cash flow position in the next 12 months, whether that be through most likely through the Gold Wedge mill. And that could be in a number of different avenues, whether that's JV or JV milling or toll milling of ore.
And Mike Santos wants you to talk about the production costs by property. Have they been nailed down?
I can't talk specifically to them yet, as we're just kind of working through those numbers. But what I can say is I can say that both projects are very economic. These are not money-losing projects. Like they're significantly economic. And what I'd say at the end of the day, just to kind of position the investment opportunity, is these assets today are significantly undervalued. I just gave the number of north of $30 million US in replacement value for the hard assets alone. This company today is a $10 million company. It's like or even less than that, $8 million US. We're talking about putting money into a company that is significantly undervalued, as a number of assets in Nevada. We believe Nevada are, especially gold. So we're pretty excited to get involved at this stage and be able to position the company to really get back producing and really realize the true value of these assets.
And Adam Zuniga wants to know, how much capital do you need to raise to get these projects producing? Give us a timeline.
Yeah, so from that, in that respect, I'd say to get the mineral, there's a number of different ways that we can tackle the mineral ridge mine. That's really going to be dependent on how our exploration project performs and what kind of grade we hit on the North Star. What I'd say is, at the low end, we could be back producing with $8 million. At the high end, we could be producing at $50 million. On the gold wedge, we could be producing in 90 days with minimal investment. And I'm talking like $1.5 million investment. So there's a number of different ways to skin the cat. But what I would say is that we're gonna try and get in production on some of these projects to produce cash flow, cover the carrying costs as soon as we possibly can. And that's probably about a $1.5 to $2 million investment. But then beyond that, we can really ramp up production with $35 million, $50 million investments, which are really going to come from banked deals backed by really solid feasibility studies that have already been done and already show that these are economic projects. So this isn't a new 5-year build out timeframe. This is a 16-month build out to get this new mill built and us back into production in an economic way.
And Ben wants to know, what majors are near you, and do you have any JVs currently or in the works?
We have a couple of JVs in the works. I can't really talk about them specifically. In terms of majors, as I did mention, Kinross is a former owner of one of the projects. They're located 10 miles up the road from the Round Mountain, Round Mountain, which is one of their largest projects. And then beyond that, there's a whole bunch of major mines in the area. I'd back up and say that also near the Mineral Ridge mine, there is it's not a gold mine, but the Mineral Ridge mine is located above Silver Peak, Nevada. And Silver Peak is one of the top, is the only producing lithium mine in the US with their Albemarle facility. The Albemarle facility that's there in Clayton Valley.
And Mike Avery wants to know if you have a US listing as well?
There is, and I think you did quote the ticker previously. There is a US listing, and our intention is to get this thing primary listed in the US over the next 12 to 18 months. It's a little bit early for that stage, but we will have there's currently an OTC QB listing, and we'll work towards getting a US primary listing on one of the major exchanges.
And OTC is SRCRF, which we have on the screen. Royce wants to know, do you have an active PPM?
We don't have an active, we have an active investment presentation. I can provide the equivalence of an active PPM if requested, for sure.
Okay. And Chris wants to know, are you set with properties now and just focused on production, or do you have an exploration arm anywhere?
No, so we're doing significant exploration on both projects. Our intention is to add ounces on both projects, and really there's a lot of blue sky potential there with exploration. And then beyond that, once we get these two assets really kind of squared away, our ultimate goal is to start acquiring M&A. We think that there's lots of undervalued assets in Nevada that we can pick up for very good valuations, and we want to work towards that.
And last question from Al. He wants you to talk about growth rate over the next 5 years in terms of production, and what's the next major milestone for any of these products that investors should look out for?
It's a little bit early for me to talk about to give a percentage kind of growth trajectory. What I'd say is that we have a really great growth strategy and plan that we're in place that we're very excited about, and we think will provide significant upside to the investor, especially given our significantly discounted valuation. Second to that, I'd say that what I'd ask investors to really look out for is obviously getting our transaction complete, looking at our drill results kind of going into the fall, which we think are going to be very good, just given how historically they have been very good. And then, ultimately getting our larger raises done and getting back into production.
Perfect. Perfect. Zane, thank you so much for being on our conference today. We'd love to have you back in the future with some updates.
Thank you, Anna. I really appreciate it.
Okay, everyone, stay with us. We'll be right back with our next presenter.